Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, December 28th, 5:08 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend coming up on 2 months long. You can see the trend gauge over here. We've got the much coveted 4 arrows, meaning all 5 of the major indexes are trending above their short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average, and market leadership also plentiful and acting well. So what happened today? 4th day of the Santa Claus rally, and what happened on day 4? Well, Santa rested on day 4. Very tight range, light volume trading, mixed closed. Here are the numbers. The big 7 down 0.36%, would have been much higher except for Tesla down 3% on the day. RG8, this is our 8 growth ETF composite, down 0.24%. S&P 500 traded in about a 0.25% range all day, opened up 0.1%, knocked around a little bit, closed just barely positive, up 0.04%. Equal weight, S&P 500, the RSP up 0.22%, NASDAQ 100 slightly down 0.05%, equal weight, same. Dow on the plus side, 0.14%, mid caps down 0.1%, Russell 2000 small caps down 0.4%, led to the downside by oils. Oils took a pounding today. In-house 60/40, or not in-house, 60/40 global diversified stock and bond down 0.12%. Stocks flat, bonds pulled back, which means prices, yields up slightly. And in-house GROTECTION down 0.04%, hit by the aforementioned oils. Let's get to the chart. Start off with the S&P 500 here. You can see how tight things have been getting, but day 4 of the Santa Claus rally, 4 closes. This one barely positive, ticking away at the average 7-day gain. It's the last 5 days of 2023, the first 2 days of 2024, as noted by Trader's Almanac founder Yale Hirsch, I believe his name was. He coined it back in the 70s based on some historical analysis. Average up 1.3% over these 7 days. We're up about 0.8%. We'll look at that when we get to the tail of the tape. But not a whole lot to look at here. Not a whole lot to look at the NASDAQ 100, just down slightly, tight range. Right at the top near all-time highs. Dow Jones Industrial Average. Higher high up 0.14%. Mid caps. Time for a little consolidation in mid caps, but it's consolidating above this recent range, which is good stuff. Same thing with small caps. A little bit of a pullback today, riding this 8 EMA higher and holding that 200 breakout, just what we want to see. How about the VIX? VIX was slightly on the day, up 0.32%. It's below the declining 21-day moving average, which is where we like it. Not going to go to UUP anymore. This chart is broken and MarketSmith hasn't fixed it yet, but they do have an index for the dollar, and that's what this represents. 0 USDR, so known as the Dixie, the DXY, the US dollar index. So back near this 100, bounced at this 100 support level. We can see very clearly how really oversold this is. Let me put the stochastic on really quickly. This has, we're due for a bounce. Let me say that. You can see last time we got oversold here a couple weeks ago, we bounced. This corresponded with a little bit of a pullback in the market. Another whoosh down. That's a technical term, whoosh down. And we're oversold again, and upside reversal. This is the looking like it's trying to put in a bottom here. Note it did not make a lower low while the indexes made a higher high. That's a plus for stocks. But this is something we're keeping our eye out on, especially because of how it impacts the gold complex. GLD down 0.58% with the dollar strong. And GDX, gold stocks got hit hard, down 2.53%. on the day. I'm going to stop covering silver, just not that important. Bitcoin, uh, stuck between the last 2 days, down slightly, down 2.3%. Has really been the Bitcoin complex stocks have been what's on a tear. I can't imagine what they'll do if Bitcoin breaks out of this pennant that it's in. Let's flip to bonds now. BND, the broad bond index. Bonds down, mean prices up slightly. TLT, the long bond, down 0.73%. So you're going to see rates tick up. Here's the TYX up 1.1%. This is really extended to the downside for a while, as you can see here, weeks. 1, 2, 3, 4, 5, 6, 7, 8 weeks oversold. This is why when you hit oversold on something, you don't just say, oh, it's oversold, I got to get out of it, or I got to buy it. Because if you bought as soon as you hit oversold, you'd be riding 7 weeks down. This is why we don't pick tops or bottoms. But the proper way to play this is when you get the crossover and you come up off of oversold above this 20 level. That's why those lines are there. We're going to take those lines off so you can see the charts a little bit better, though. So that's TYX, and then you got the 10-year, the TNX, up 1.61%. Let's go to the tail of the tape, and we've got a lesson today, an answer, and it fits in with it's not how much you make, it's how much you keep, and no predictions. We'll get to that in a second. Here's the tail of the tape. You can pause this. I'll hit the highlights. So up 0.77% on the first 4 days, 4 positive closes for the S&P. As I said, the average up 1.33%. So we've got the last day of the year tomorrow. Expect really low volume trading, but that means it can be pushed around by money if somebody wants it to. Day count 4 up with, we'll call this a consolidation day. 5th day above the 80 MA, 39th above the 21-day exponential moving average, tight range all day. Yesterday was perceived as a strong bond auction. Today, a weak bond auction, and stocks briefly had a quick move down. They recovered and then sold off into the close. Sectors, no more UUP here. We'll start calling it the Dixie, which is the dollar index, the DXY. It was up along with bond yields. Utilities, solar so oversold. This might be a bounce back sector to look at in 2024, and KWEB, as the Chinese government took their boot off the throat of the gamers, at least for a day. On the downside, oil's really hit hard. Bitcoin and the Bitcoin complex, and gold and the gold stocks. No changes to the portfolio today, so 1.67% beta bottom line. And on the fourth day, Santa rested, tight range, indexes mixed. We'll see what tomorrow brings. We're going to look at a couple of charts, and for a change, let's look at some charts that what we normally look for when things are pulling back is that ideally they bounce at the 8-day exponential moving average. Let's look at something that's really leading coin, and we'll note how this is bouncing at the 8. If something breaks the 8, we want it to bounce at the 21. Let's take a look at something like snow, which broke the 8 a couple times and it's waiting for the 21 to come up to it, but it's consolidating nicely above this cup and handle breakout in the blue pivot plus 5% area. But if it did come down, we would want it to bounce off the 21-day moving average and go higher. Well, a couple of recent leaders look like they might be taking a break. I pointed out DEC a little while ago, and it continues to sell off. Volume's light, but if you look at a lot of volume bars, they're way below average. This still 30% below average on average over the last couple of days. But note, it should have bounced at the 21, and then we see what it does when it hits the declining 8, and couldn't get back above it, and now broke below the 21. So the more moving averages that you break, the closer you get to either the next spot, and it's very normal to buy. It's a good spot to buy with a bounce off the 50-day moving average if you want to give up that much more room, which is an additional 6.6% down, much more off the high if you want to give that back. But normally the first bounce off the 50-day moving average in a leading stock is a good spot to buy. But ideally, we want them to hold the 21. DEC has not. Two other ones that have not, Airbnb, acted great for a while. Well, a couple of weeks anyway, after this nice pop out of this wedge, some decent volume patterns. But when it got up here around 150, that's a Livermore level, just couldn't get back above it. Note it was also resistance back here in September and spent a couple days above it back here in July, but failing there and below the 8 and now below the 21. Note the relative weakness in that stock as well. And also CCJ, we got stopped out of this last week, and this really hasn't recovered, but it did something that we always watch for, and it's a negative. So when you bounce off the 50-day moving average after breaking the 21, you want to see what happens when you come into the declining 21-day moving average, and it failed there twice over the last 4 sessions, and now coming back into the 50-day moving average again. If you break the 50-day, especially on heavy volume. Now, this has had a good run. It just may be time for it to form a base again, and we just really don't hold things through bases. Bases can be 20, 25, 30% long. So if we were still holding it, we'd be wrapping it up on a weekly close below the 50-day moving average, or if we had a big gain in it, we might give it a little bit more room to see if it regained it the next week. But we're out of this, and it failed this test on the declining 21-day moving average. So we'll take that's a look at some unfortunate things that were leaders, but those 3 go from the leader to the laggard column now. Impacts to the portfolio, I mentioned NRGU, very weak. It's down. Filling the gap after this move up, sitting on the 21-day moving average, we need to see a bounce out of this, or we'll be exiting this shortly. Bitcoin took a little bit of a break today. We already showed that, but that didn't stop coin from having a positive day after gapping down, closing near the highs and closing positive. So good stuff there. What else stood out today? AMD just continuing to crank higher, up another 1.84%. Pretty extended, but 3 beautiful days up. Above average volume in the holidays means it's being accumulated, but we already knew that from these big 4 blue bars back here. Volume accumulation 4 days in a row after it had that investors conference and pointed out that they are able to increase capacity, which is something that NVIDIA has not been able to do. And this has been really outperforming NVIDIA, and we moved some of our NVIDIA position money into this, and it's now our largest position. So that's enough for charts. Let's get to something that I wanted to talk about today. You know, we don't make predictions here. We say just the facts. You guys know I'm a big tickermonkey.com fan. It's a nice JT over there is the chief banana, and he runs a fantastic chat service, a lot of good technicians, traders in there. And, you know, we always say we don't predict, but he just put this in chat today, and it was just something that I want to share with everybody because he's more eloquent than I am. Not that that's a high bar, but he said, I was asked today, or I was asked yesterday after the close, what my best idea or picks were for 2024. My reply was, I have no idea. And this is really what I say when somebody asks me that. I say, it depends on the market. He said, nobody knows what the market will want in the advances and declines. Best to just stay in tune with the tape and listen to it. No biases, just diligent observation and respect for what it is serving up. I think the best idea every year is the market itself. And that's just a great quote right there. The best idea every year is the market itself, knowing that there it is serving up winners through every cycle instead of trying to hallucinate a vision for what may or may not happen. Focus on your edge, your process instead. Fortify your edge, your process, your rules is what you want to, is what will give you the confidence to not even have to think about questions like what's your best idea. You'll just already be on the best ideas as they show up, and learn to play it with a rules-based edge, and it will feed you for a lifetime. Make it a must to do it correctly, and this is key, and not as a passive hobby. Hobbies cost money. If you want to do it correctly, you make money. Otherwise, you're trading, you're going against the brightest minds in the entire market, and they will take your money. It's like being the worst player at the poker table. If you don't know who the sucker is, you're the sucker. So that was a fantastic set of quotes by him. Go to tickermonkey.com if you want to check out his service. I've been there for a decade, and there's reasons why. So it's going to wrap it. As always, like to hear from you. Emails don@revereasset.com. If you're interested in becoming a client, it's dan@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Right now, we're more concerned with making, and we will be unless we see a violent correction and a break of the 21-day exponential moving average. Until that, pullbacks are for buying. We've been up many weeks in a row. We know we're extended. We've been saying that for weeks. Getting a little less extended as we go sideways, so that's good. That's more a correction through time than through price as the moving averages catch up, and that's what we want to see. But for now, we are bullish, and that's because the market is bullish in the leaders, because that's what the market is serving up, just like JT said, and that's what we'll be looking for in 2024 also. And with that, I'll wrap up the video for the next to last trading day in 2023. 12/28, last day tomorrow, closes the week, closes the year, closes the quarter. And join me tomorrow. We'll be doing our podcast. That'll be out on YouTube in the afternoon and released over the weekend via email. And with that, I'll wrap up the video. Thanks for listening and have a great day.